The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is a quote by Duke Ellington. A believer is an optimist who thinks of tomorrow. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We had the Dow Industrials up 15, NASDAQ up 33, S&P's up 5.5, gold contract down $9.10, traded at $1,201 an ounce. Silver down 37 cents at $16.46 an ounce. Platinum off 7 at $1,166 an ounce. Light sweet crude down $3, trading. Whereas, 326 traded at $50.71 a barrel. Bonds, we have the 10-year and the 30-year flat. The 10 years running at 129.10, 30 years at 164.27. King dollar's up 109 ticks, trading out at 98.16. The euro's down 20 at 107, and the yen's trading down 27 at 120.01. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. Now, let's go to the world of the S&Ps. What do we have out here? Okay, so the Fed came out with their minutes at 2 o'clock, folks. Bottom line, it has no doubt put volatility inside the marketplace. If we actually go first, we're going to go to the futures. And the reason we want to go to the futures first is this, folks. What you're going to see is this. And this is pretty cool how this whole thing has been shaken out today. Because as we get into the close, I expect you're going to get more volatility, number one, and you're going to get some selling coming into this close. And this is what it is. The future market, okay, you talk, and there's always fading inside when the Fed comes out, that it puts volatility into the marketplace in a huge way. And what the futures did is this. The futures went from 2078 down to 2065 in about a heartbeat. Well, guess what? In the next heartbeat, they went from 65 going all the way back up to 78. Now, what we have laying out here, however, is what? Is a lower low with volume on it. So I expect you're going to see here, as we come into the close, you're going to see the selling coming into the close once again. And we'll see whether it actually gets down to 6.5. That'd be pretty intense if it gets down to 6.5, which was the low of the day. But that baby wants to get tested. That's the first part. The second part, if you have ever read one of any of Joe DiNapoli's books, this is actually a railroad signal. And with the way this is set up, this type of railroad is that you sell the 0.618 of the whole deal. It's the bottom line is that we'll see if this bottom gets tested coming into the close, but I expect you will get that test. What we have, and if you take a look, if we go to the SPY and we just take a look at this of the last 3 days, I'm going to put this on a daily, what you're going to see is that once again you're going to have a failure on price and on volume. And the market's using a huge amount of energy, folks, to try to get up over the, let me pull this right there, to get up and over the 208.61 level. 208.61 was the high that was generated on March 30th. It's tried 3 days in a row to get over it. Hasn't been able to do it. Well, it gets over it, but basically because it's closing under it and it's had lighter volume. Now, it's going to be really intriguing today if, in fact, we do come in with lighter volume today. It'd be a mind blow because yesterday we only had 81 million. Well, we're at 63 right now. So the way that it's set up at this point is that we will have lighter volume again. We'll see if that stays that way coming into the close. We look at the NDX 100. We use the 3 Qs for the NDX 100. what you have with the NDX 100 is this. That 3 Qs are trading at 106.47. And the Qs will have a little more volume than yesterday. They should anyway. Yeah, they will. Because we're already at 19,300,000, and that's what we were at yesterday. However, they are going into 41 million. The IWM, the small caps, what do we have with the small caps out here? What you have with the small caps is this. Small caps, the IWM is trading at 125.25. The test out there is 125.40. The volume is 22 million, and right now you're only trading with 14 million. So it looks to me that what you'll also have is the small caps won't be able to handle higher price. We go into the gold contract. We take a look at gold. Gold contract is trading out at 1201.60, and what you do have inside this gold contract is you're backing down. You are backing down with lighter volume. We have 108,000 contracts. That 108,000 contracts is into the April 1st level, and the April 1st level you had 151,000 contracts. So it's going to need a lot more contracts in order to break that price down into lower price. The 10-year bond. What do we have with the bond market? What we have with the bond market, folks, is that they can't budge this thing. It's pretty amazing, actually. The bonds right now are trading flat. You're at 129.10. You've done 817,000 contracts. You're going into 1.1 million contracts. So the way that baby is set up is that also wants higher price. And we'll see how this whole thing does shake out, no doubt. Let's get a Mark in Fort Collins. Hey, Mark, what's going on?
Much, Tom. How are you today?
I'm doing great, man. You having a good day out there?
Oh, yeah, always.
Cool, man. That's
hey.
Yeah.
I was listening to Dave White earlier, and what do you think of that FXI? It looks like a big old shooting star up there. And then I was going to play it with Ang.
So the FXI, folks, is the iShares China large cap index, and Shanghai, folks, was up 3.8% last night. So if we take a look at this FXI, I wouldn't be buying it or selling it right here. I mean,
okay.
It has volume, it has everything behind the move, man. So it's like, okay. What this actually does have too is that if you take a look at this, let me pull this back. I'll put this back for about 6 months, and you're going to see something here. This
like it's completed ABC apps.
It is. Stuff. No, it took the ABC on the 30th of March. 30th of March, right there. It took out the B point, took it out with volume. So if we bring this back, let me put this on. That Hang Seng last night was a trip. Okay, so let's see. So you get 41, 31. That's 51. It wants to go to 51 anyway. Just the way that's set up, that's 51. And right now you get 49, 42. So.
Lay off.
Oh yeah, man. Hey, listen, the Hang Seng went and it went with volume. Yeah. There's plenty of better trades out there, man.
Okay, cool. Thanks.
Okay, man. Have a great one. Have a safe one. Let's go over these futures. This is going to be an interesting close, folks, okay? Just like yesterday, it's pretty amazing watching this whole thing shake out. What the bulls and bears had out here today, folks, is this. Both of them had a shot for lower volume, for lower price and higher price. Both of them failed. That's where we are right now. On the intraday basis. On the daily basis, right now, I guess it's a tossed up too, because the reality is that we're right where we were the last 3 weeks in trading. As I said a little bit earlier, though, what has happened is that this market is trying to got to higher highs not higher highs, just into the March 30th level 3 days in a row. Every single time that the market tries to get to higher highs, folks, and doesn't get there, what happens is it's an energy deal. And that energy deal, it gets taken out of the marketplace. And what does that do? That also leaves more information for traders to trade on. That's how this whole thing shakes out. As you get up to those highs, guess what? There's an operator up at those highs. They're selling those highs, and they're selling them pretty quickly. And we'll see what kind of prints are on this coming into the close out here today. Because there's certainly If there's buyers out there, well, guess what? This is the place they're going to buy. There's sellers. That's where it's set up to sell. Some of the high-volume stocks in this low-volume market. Well, here, first off, let's go take a look at the Dow Industrial, see what's putting strength into it versus weakness. The Dow is up 11, but putting the strength into it today is Nike. That's up $1. Visa is up 67 cents. You get Home Depot up 102, and you get United Technologies up 85. Taking it away from it, we'll get into this oil market. ExxonMobil can't get out of its way. ExxonMobil looks like it's going to be an ABC structure on the way down. That's going to be a huge problem for the Dow Industrials. It's down 159 right now. It has some juice behind the move. Chevron's down 188. You get Microsoft down 30 cents, and Apple is off 62. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow right now is up 9. Nasdaq's up 31. S&Ps are up 5.5. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 70% 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Right now, you get the Dow Industrials up 4, Nasdaq's up 29, S&Ps are up 4.5. And as we do each and every Wednesday at 20 past the first hour, we get our man, Mr. Daryl Martin. And don't forget, folks, Daryl has an outstanding show right here at TFNN every Tuesday, Thursday, 1 to 2 Eastern Standard Time. Daryl and I have a show Friday mornings, 10 to 11. And it's all about the Nadex platform, folks. You want a platform where you have defined risk. You get a market out here with highly volatile moves, which is just a beautiful thing for trading. A defined risk. Come over to our website at TFNN, and you're going to see the banner on the top of the side. Hit the banner. You can bring up the account, but they'll put $25,000 of paper money into your account. Daryl Martin, what's going on?
How you doing, man?
Doing great, man. How these news-driven events are always nice to be trading, no doubt.
Yeah, and I go over those on my show every day. And last night, we guys talking about yen monetary policy. Might be a good time to be looking for trading last night.
Oh, cool.
And I'm sure as you noticed, the yen took off, was moving all over the place. It was a great time. All over the place was a great time.
Are you there, Daryl?
Sorry, man.
That's all right. That's all right, man.
Yeah, a little technical. Whenever I was opening up the transfer there.
That's cool. So, with the Fed minutes today, you talk about, folks, these fast moves in the S&Ps, you can trade the indices, you can trade the currencies, you can trade the commodities inside the platform. Bottom line is that when you get 10-point moves in the S&P, which is just insane by itself, it's great because it doesn't matter whether you're a bull or a bear. If you're basically take the trades off or don't take them off.
You can take them off to grab the profit. You cannot take them off. You don't have to worry about the stop on them.
You don't, which is just amazing, man. There's no two ways about that, So today out here was pretty amazing, and I suspect it's still going to be amazing coming right into this close, because right now you're at 7.2 on the S&Ps. We'll see whether they want to go back down to those lower levels.
Exactly. And, I was talking about, we're talking about the news. Like, the news is being awesome for volatility, everything that's coming out.
Yes.
And I just put up a chart in the den. Those who are, listening out there and don't currently see on Tiger TV right now.
Yeah.
You can always go back and check the replay. But basically, it just shows that the market was, pretty flat at night, waiting on the monetary policy report to come out, which is really normal.
Right.
And anytime there's going to be a policy statement, usually the market can go flat until that statement comes out.
Yes.
And so on Nadex, you could go in and you could do a range-bound trade where basically you said, hey, I think it's going to stay above this price and below that price.
Okay.
And I call it a butterfly. It's like where I buy a binary below it, saying, hey, it'll be above this, sell a binary above it, so it'll be below this, it stays in between, then you make a nice profit on the trade. And then whenever that statement comes out, of course, I want to make sure those trades are closed or expired before then.
Right.
And then I expected a lot of volatility. So at that point, that's where you may go in and go, hey, you know what? Yen monetary policy statement, when those happen, usually the yen moves quite a bit. I'm going to go in and look at doing like what's called a strangle, which is the exact opposite.
Okay.
So now I think the market, instead of staying like, above this price and staying below this price, like inside of a range, like between 80 and say 120, right?
Yes.
Now I think it's going to bust out and go above 120 or below 80, like just a simple example.
Yes.
So you could go in and not only take advantage of the flat market leading up to the policy statement, but then you could take advantage of, I don't care what direction it goes.
And you got both of them today.
Exactly.
Which you do quite a bit, actually, right?
Exactly. 100%, yeah. So you go in and you go, okay, well, if I think it's going to be sort of flat and choppy, well, then I'll range-bound trade it. If I think there's going to be a big move because of news, then I'll breakout trade it. And in both cases, you don't have to know direction. You don't have to be some technical expert. It doesn't take a whole lot of, it's you look at it, it's staying in a range. It has for the last, it stayed in a range for like 20 hours.
Right.
Okay.
Right.
Well, maybe not 20, but let's see, 6. Pretty close. So we got started at 2 p.m. yesterday.
Okay.
And it stayed in that same range till 14 hours. Okay.
Yeah.
So it stayed in a range for 14 hours of range-bound trading. And then you knew that policy statement was going to come out. It wasn't a surprise. It wasn't like, this end, breaking news. It's announced in advance. We always know when they're going to happen. So when that news is going to come out, okay, things will stay flat. And then when it comes out, it'll usually move quite a bit. I have no idea. You have no idea what direction it's going to go. We can have an opinion, but we don't know.
Exactly.
And with this, you don't need an opinion. You don't need to know. All you need to go is, hey, my opinion is it stays flat because statistically it shows it does before it comes out.
Yes.
And that it usually moves a lot after it comes out. So why don't I just trade range bound and breakout on both sides and not worry about it? So it's a very relaxing, simple way to trade. It's also a great way to trade oil inventory reports and things like that. Do strangles on those.
Yep, and there's no doubt inside those S&Ps, you got it all out here today.
Oh my gosh!
Yeah, right. With the movement, folks. Okay, both ways was up and down approximately 10 points. Okay, and we actually did the first movement at 10:30 this morning. Went down. It got down to a price point of that 65, then goes back up to 77. Gets down to 64, and of course we're at 74 right now, 73. So,
and it's bouncing right in between the settlement and 0.5 deviation level all day.
Yeah.
So basically, 77.50 and 67.75 are the two levels we're looking for support and resistance on.
Yeah, have to love it, man. There's no doubt about it. When we take a look at it, that Hang Seng went to the moon last night. That was pretty interesting. The Hang Seng, folks, was up 3.8% last night. The currency move is like, hey, this euro dollar move that seems to be getting some traction. So that's going to be interesting. And it doesn't really matter. My take on this, folks, is that we're not going to make it on the dollar. This is over that last swing point up there at 99. So I'd be basically looking to go long the euro against this 107.13 area, and we're at 8.9 right now. So that's going to be interesting to see where that shakes out.
So just it's one of those things I just try to remind everybody constantly, because I know this is new. Like trading Nadex is new to a lot of people.
Sure.
And they maybe are scared of options because they haven't got into them, and or they're scared of futures because of the leverage. And the nice thing here is you can trade futures, you can trade forex without that risky high leverage, uncapped risk trade, and you can trade options without that massive complexity of, week, day, month, theta, delta, gamma. Those things matter, but they're so much simpler.
Yeah, there's no doubt.
You're not looking at 1,000 chains for one choice, or 1,000 contracts on one chain for a choice.
Right.
So, but it's a great way to start. And I know traders that have been trading them, for a long time now doing great. And I know brand new traders doing well out of the gate.
And folks, once you get the account up, so you can come over, you can test drive the product. They'll, if it's free, you bring the account up. Then Daryl, he's on tomorrow, 1 o'clock. Great show. He also has an analyzer that you can test drive. And so what happens with the analyzer, which is dynamite, is that there are a lot of different contracts, and many of those contracts expire at the exact same time. And there is just about always a differential. It might only be a half a point differential and the same expiration, but guess what? A half a point in the S&Ps is $25. So it's a nice little deal. Inside that, and you can test drive that absolutely free, right at TFNN. Daryl, you have a great night, safe night. We look forward to the show tomorrow.
Thank you.
I'll
see you then, man.
Have a great one. You stay right there, folks. We'll come right back. Dow right now is up 15. Nasdaq's up 31. S&Ps are up 5.5. We have gold down 9.60. Silver's off 39 cents. And light sweet crude's off 3.20 rather. We're going to be right back.
You know what's cool? taking something that's good for you, something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And so inside those Fed policy minutes today, this is kind of a briefing of what you had. Federal Reserve policymakers last month was split over whether they would raise rates in June, a debate that occurred before the recent disappointing payroll figures the minutes show. Several participants judged that the economic data and outlook were likely to begin normalization at the June meeting, according to the minutes. Others argued that the energy price declines and the dollar's appreciation would continue to curb inflation, suggesting that a rate increase should be delayed until later this year. A couple said the economy probably wouldn't be ready for a tighter policy until 2016. The minutes didn't identify the participants or give the precise numbers of those holding a certain type of view. So the bottom line is that what I expect you're going to see out here, folks, is that this rate policy is going to be a battle going all the way to the rest of this year. If you actually just take a look at the 10-year rate is still saying, guess what, that the rates are not going to go up. So we'll see where that does shake out. But bottom line is that right now this 10-year is trading at 129.11. The high is 130.20. You're right next to it, and it looks like it wants to take that high out. That's about as intense as you get. You take the high out, so the 10-year is trading yield-wise, it's a 1.9. Bottom line is that that's saying that, hey, bonds want higher price, that's lower yield. Some of the Dow stocks, what we have, actually, let's go and take a look at the XLE. So this is, pull this XLE up. So the XLE, you got the oil and gas sector, and what you did have out here today, you had a huge takeover inside the oil and gas sector. The company was getting taken over, has been a mess, but $70 billion and was quite a premium. There's no two ways about that. So when we take a look at the XLE, what you'll see is the XLE is trading at 78.62. It has no traction. I mean, it just can't get going. Part of the reason, or one of the main reasons, has to do with ExxonMobil. So if we take a look at ExxonMobil, what you're going to see is this. Exxon's trading at 84.22, and what it's done today, it got to open at 85.80, and it's, let me see, is this Exxon? That's a 10-minute. Let me put this on a daily for you. So it opened, decently, okay, right flat, actually, 85.80, but it sold off all day. What this wants to do, number one, the last lowest swing point had 11 million shares. Guess what? This is 12. So you're going after a swing. You're doing it with higher volume. What it's going to do is go after this swing at 82.62. And, we'll see whether we take it out with juice. You take that out with juice, that's going to be big problems for ExxonMobil. We look at Chevron. Chevron's not a bad setup. Now, this is what the difference is. So ExxonMobil's the largest weighting inside the XLE. Chevron is second. Chevron is down $1.60, 6.5 million, but that 6.5 million is actually light volume. Why? Because you're coming into the day of strength that it had on the 30th of March, and on the 30th, is it the 30th? Let's see. Yeah, it's the 20th of March. On the 20th of March, what you have here is that's coming into it's a 14 million. The high of that is 107.26, and that has 14 million. So that is going to need a lot more juice in order to basically take that apart. The IBB, let's go take a look at the NASDAQ Biotech Index. The IBB is trading out at 350, and what I expect you're going to see here is this. Now, the last swing point, when this got a little juice last week, it got up to 353.04. We're doing 1.9 million shares there. That's going to go up and test that baby. We'll see whether it can get up and over it. What you are going into is the downdraft. The downdraft was pretty dramatic. The downdraft was 48 million. Is that 48 million shares? No, it's 4.8 million. Phew, that was ever 48 million versus 1.9. 4.8 million shares, still pretty bad, going into 1.9. 1.9 is going into 4.8. So the way that is set up is that that's going to need a lot more juice in order to get up and over those values. Big Blue's been having a tough time for a long period of time. That is still trading out at 160, 165. Last swing, the swing point, it can't seem to get up and over this March 25th area. And that's happening in a lot of equities, folks, okay? That is a sticking point in a lot of these equities, and we'll see if, in fact, they can get any traction. I suspect it's not going to. We go over to the financials. We look at the financials. Financials also no traction whatsoever on the XLF. XLF is trading out here at 24.20. And what you have with the XLF, that is building cause to get into lower price. So the largest weighting structure in there is BRK, which is a Berkshire Hathaway. If we take a look at Berkshire, what we have with Berkshire is trading out at 143. That high out there that was generated is 152, and basically Berkshire's having a hard time holding price. JP Morgan Chase, that would be the next one. And you want to hear a number, man. This is a trip in itself. I hope I can find this thing again. Hold on one second. Here it is. So check this out. JP Morgan Chase has racked up more than $36 billion in financial and in legal bills. In legal bills. I'm not talking about the fines. $36 billion in legal bills alone since 2008. Is that sick or what? That's hard to believe, and they still make money hand over fist. Bottom line, J.P. Morgan Chase is trading at 61.14, and 61.14 also can't handle higher price. What J.P. Morgan Chase is going right into, and the two separate downdrafts that occurred in, first one was December 10th, the second one was January 5th. That level right there, who's ever sitting at that level, whatever fund is sitting at that level, they're just given each and every time that J.P. Morgan Chase gets up to those levels, they are selling. There's probably a huge order right there, distributing stock on a continual basis. And, when you do have a J.P. Morgan or one of these very large caps in general, it takes months and months in order to basically move out that type of product, because you're talking about, I think they have 3 billion shares outstanding. Bottom line, some of those large positions, they have 100 million, 150 million shares. So American Capital Group, that's American funds. They've been moving it out. They still got 116 million shares. Fidelity, well, here it goes. So this doesn't mean they keep selling it, but on the last filing, Fidelity stopped moving it out too. Fidelity had, as of the last filing, 128 million shares, and then Wellington's right behind it. I talk about this many times. Oh, check this out. I got to put this up for you. This is like a continual, folks. So it's pretty amazing. So once Fidelity goes, right, Wellington goes, MFS goes. They're all on the same block up on State Street in Boston. It's just wild. So they're all tagging each other, and that's, by the way, that's been going on for years. Okay, it's not illegal, by the way. Okay, it's just, I get them tagged myself on the Bloombergs. But what ends up happening is that is one of the safest ways that they all can keep their jobs too. That's what it really comes down to, I think. They all get big research firms. Bottom line, one goes in, all of them go in. One goes out, they all go out. And you see that on a continual basis. I really dig that when they're basically going, well, particularly Fidelity. Fidelity, inside the gold market, is a very active participant. They're great when they're going in, and it's terrible when they're going out, because the bottom line is that they always, have, got quite a few shares, and if they're selling, watch out. I'm going to have to get our man, Mr. Rob McEwen, on, because it was a shame. You probably read about it. But McEwen Mining, it got 7,000 ounces of gold stolen. Armed robbers walked away with an estimated 7,000 ounces of gold worth $8.5 million at current prices from the Canadian-owned mine in western Mexico. The gold was contained in an estimated 900 kilograms. That's 1,984 pounds of gold-bearing concentrate. The partially processed form of ore stolen from the refinery at McEwen Mining El Gallo One Mine in Sonora State on Tuesday. The company said in a statement, while McEwen is insured, the policy won't be enough to cover the expected loss, the Toronto-based miner said. The crime is being investigated by the Mexican authorities. They probably ripped him off. McEwen Mining said in a statement, no employees were seriously injured, and there was no material damage to any of the company's facilities. Bottom line is that that is, I'm sure it's certainly not a first, but boy, oh boy, you got to protect that mine. I'm sure that what will end up happening is that those protections are going to be a little bit different and a lot more. No doubt, no two ways about that. We go and we take a look at United Technologies, UTX. United Technologies out here is trading at 117, and what you do have is that many of these, what we are going to see is this: the numbers are going to start coming out. A lot of earnings are going to come out, and what you're going to see more than likely, folks, is that this is the quarter that the strong dollar, is going to hit many of these companies. This is Tom O'Brien. This is TFNN. Dow right now is up 26. Nasdaq's up 35. S&P's are up 6.5. You stay right there, folks. We're coming right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. 877-927-6648. We're at Dow's up 15, Nasdaq's up 33, S&Ps are up 5.5. What you're going to see out here, folks, volume-wise, what we're going to get, we're going to have light volume. We're going to have a failure at those swing points once again. On the NYSE, you're dealing right now with... Yeah, it's going to be about 600 million. Yesterday we did 663. And on the NASDAQ, that's really light volume. NASDAQ's going to come in about it could do 1.7. We'll see whether it can get to the 1.7. The NASDAQ, the actual composite, is at 49.43. Now, it's going to get interesting about the 49.43. Is that is hanging right at the high. So the composite itself, can launch that 48 level, meaning 49.48. It has gone to 56, hasn't handled the 56 level. The NDX 100, different ball game. NDX 100, you're at 106.44. And bottom line is that has failed a few times at this 85 level. And we're at 22 million versus 22 versus 30 million. The SPY would be the biggest failure. And actually, the SPY, the SPY, if we take a look at this is the cleanest also. The SPY right now is trading out at 207.83. We went to 208.51. You've done 75 million shares out here. That's 75 million. Yesterday we did 81. It's going into 114, but the downdraft has 159. So that 159, folks, is no doubt a monster number. What you can expect, I expect that, even as we come into tomorrow, you're going to have some volatility. The day after a Fed meeting, bottom line, they like to push the market up, down, and all around. And I don't expect anything different on this meeting. I would say that the marketplace themselves, when you read these Fed minutes, if you put them beside the last Fed minutes, what you do have, you basically have folks that think they could have went, in June. You got other folks that said no. In that aspect, that was before the jobs numbers come out, so that's pretty intense. I suspect, we'll see whether it's going to be June or, in fact, you go right up till September. And you go through the summer, listen, I actually don't even see how they're going to raise the rates, because when we're still dealing with the world, because you're dealing with world rates flat out. And the bottom line is that the 10 years across the world are low beyond belief. I mean, you get Spain. Spain's at 1.1. Portugal's at 1.6. Both of those countries are broke, folks. Great places to be, but it's not that they're not going to pay their money back. what it is, and this is how all these large sovereign nations are running, basically, and the banks are running along with them, is that they just keep putting out their debt, pushing it out further and further and further. Greece, of course, is the best indication of that in a huge way, not in a small way. There's no doubt when you take a look at the Greek market, bottom line is that we'll find out someday if they'll ever pay the money back. I suspect that's going to get written down and not going to get paid back. The European Union themselves is scared to death that they will come out of the European Union, and that's not going to happen. Why? Because that would throw a curveball into that in a huge way, not in a small way. What is going to be interesting, though, is statistically, what you do have is that when you have these large buyouts in the energy sector, the oil companies themselves have been pretty good over the course of years buying when the oil price is bottoming. We'll see where it happens this time. But the last time that this went down the pike, meaning like 20, 30 years ago, let's see, how many years ago was it? It was when oil was at $10. Because when oil was at $10, that's when you had Exxon was taking over, Mobil, you had all these takeovers simultaneously, and they actually hit it right on the nose that time, meaning that when they bought those companies, oil had turned around, and you talk about quick, it had turned around. It was like a couple weeks after that, so it was pretty intense in the aspect of how they called that bottom. I heard the CEO today of the, was it BP that got taken over here? Not of the company that was taking the BP over, not BP. Yeah, it's not British Petroleum, okay, but it is a British company. Bottom line is that he was saying specifically that it had nothing to do with the low oil price. Of course it has to do with the low oil price, folks. That's when you are buying market share. That's what they're doing. And that's a smart way to do it, because if you get the deal right, bottom line is that you're buying assets in the ground that right now the market is saying is only worth 50.95 a barrel. In fact, if we go over and we take a look at this, CLK5, this one's going to be interesting, and this is why. Now, volume came into the marketplace again today when this was backing down, CLK. And what this was all about, of course, is selling in the marketplace. But what we had yesterday, too, you went topside with volume. So this is telling me that, guess what? This is going to try to make a run for this $56.07. Right now, you're trading out at 50.91. Yesterday, what did we do? Yesterday, went topside with 549,000 contracts. You're back today with 474. That sets up at least a test of the February 3rd level. You break the February 3rd level, and oil can get some real traction. That's how this is set up. Now, the XLE, whole different ballgame. XLE's having some big problems out here. Big problems. Dollar's going to be challenging. The dollar is going after the swing point. We'll see what can handle the swing point. The swing point it's going after is 99.00. Right now, you're at 98.20. So we'll see how that handles that whole level. Bonds, again, as I say, bonds, bottom line, want higher price, lower yields. And that lower yield, no doubt, is going to continue to keep firepower under the real estate market. Whether it's the real estate stocks, whether it's the suppliers of those stocks, those are some of the best-looking stocks still in the marketplace. They had continued to basically take swing points out, and most of them had taken swing points out with some real volume. This is Tom O'Brien. This is TFNN. You stay right there. We're going to be coming right back. Dow Industrials are up 18. NASDAQ up 37. S&Ps are up 6.5. We're going to be right back, folks.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This is by Pete Easternoff. The point of living is to believe the best is yet to come. Market-wise, let's take a look at it out here. We had the Dow Industrials finish up 27, NASDAQ up 40, S&P's up 7, gold contract down $8.10, trading at $1,202 an ounce. Silver off 35 cents at $16.48 an ounce. Platinum down 7 at $1,166 an ounce. Copper down 3 pennies at $2.73 a pound. Light sweet crude down $3, trading at $50.93 a barrel. Bonds, we had both the 10-year and the 30-year flat. 10 years trading 129.09, 30 years 164.23. Both of those folks look to go to higher price, lower yields. King dollar up 214 ticks, trading out at 98.27. The euro's down 32 at 107.82, and the yen is at 120.12. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Bottom line, folks, you get another failure on price, failure on volume. The market has been trying to get up and over the downdraft that had been created on March 25th, since March 25th. Each and every trading day, what we have seen is that there's a seller, a bunch of sellers right at those levels. And bottom line, yesterday the SPY got to 208.76. Today, 208.51. You did 85 million shares out here today, and that is anemic in a huge way. Yesterday we did 81 million. You're going into 159 million. So bottom line, the sellers are overwhelming the buyers at this particular point at this particular level. And the SPY itself, folks, is not only the weakest right now, it's the most clear as to what it wants to do. We go over the Qs, and this is where we're going to have some divergence, and this is what it is. Now, the Qs did 25 million. We closed at 106.64. You're going into 41 million. The swing point that I suspect it's going to try to get into tomorrow is about 20 cents higher. Why? Because the volume's not that bad. 25 million is not bad. Much less than the downdraft, of course, but the swing point, which it's trying to get into, has 30 million. So that, I suspect, will go tag it. We go take a look at the IWM. Same setup in the IWM, meaning the IWM is the one industry that you really don't want to be shorting. The IWM, we're at 125.47, and the high in the IWM is 126.31. The low of that high is 125.79. So you can see we're only 30 cents away from the low of the high. That's going to go tag it. That will go tag that number. Gold contract. What do we have with gold? Bottom line, gold backs down, has lighter volume on the back down. Gold looks like it's still building cause for higher price. We did 111,000 contracts today. That's going into 156,000. 151, I think. Yeah, 151,000 contracts. So bottom line, it's going to need a lot more than that to basically back down and destroy price simultaneously. Alcoa just come out with numbers that leads off the marketplace. Alcoa closed at $13.67. It's trading right now at $13.60. Numbers go like this in Alcoa. They basically missed the estimate. The estimate was 26 cents. They made the estimate. What did they miss then? Okay. They made the estimate. The estimate was 26 cents. They made 28 cents. Their sales are $5.8 billion. Yeah, it looks like, even the gross they made. Bottom line is that Alcoa is having a tough time getting any type of traction whatsoever. It's only down 10 cents, but that's not the point. The point is that the stock has already just gone from $17.60 down to this $13 value. What I expect you're going to probably see here is that it's going to try to get into this $12.65 once again. King Dollar. What do we have with King Dollar? If we take a look at King Dollar, this is what you have happening with King Dollar. King Dollar was up 224 today. Now that's after being up 1,000 ticks yesterday. The swing high on King Dollar was April 1st. That's 98.97. That's going to get tested. That's the way this is set up. It's going to need dramatically more volume, and we'll see whether we get that or not. King Dollar did 48,000 contracts today, but you're going against 90,000 and 100,000, I believe. Let's see, is it 100? Yeah, 102. You're going against 102,000 contracts from the March 18th level. You're going against 96,000 on March 19th, and you're going against 87,000 on March 20th. So that's the supply line that you have up there. And that supply line, folks, is pretty intense. There's no two ways about that. We'll see if, in fact, that it can take out that supply line. But thus far, doesn't look like it's going to. The Fed minutes came out today at 2 o'clock. Bottom line is that you have some divergence inside the Federal Reserve boardroom. Bottom line, you have a couple of governors that want to raise in June. You got a couple others that say we got to wait till later. The bond market itself is saying that, guess what? It's not going to be raising anytime soon. If we go over to, you want to see something here. This is a trip. This used to be a high flyer for the day that it went public. Zynga. So ZNGA. Okay, that's the big social gaming company. Bottom line. Now this stock here. If you want to see something that pushing out paper, how Wall Street pushes out paper and just brings people deep very quickly. Well, this was one of the equities that did it. Right now, this is they just halted the stock, and the reason they halted the stock is that they're bringing back the guy that was the founder of it. We'll see whether it can help the stock. This stock, this is the essence of it. So check this out. The stock, had gone public, okay? And when it went public, I think it went public at $14. 1 second, hold on, let me see this. I think it was $14. Because wait to see the amount of bread that was taken in. Okay, so it went public at $12. It's at $2.80. They sold 49 million shares at $12. Then they immediately did a secondary right after that at $10. So they took in plenty of bread. I mean, you talk about an extraordinary amount of bread. And timing aspect, it was all out there. Bottom line is that the stock itself, it went public at that level, and then what did it do? It shot all the way up to $15.91 and then just gave it up. I mean, gave it up in spades, too. The bond market, if we go take a look at the TLT, the 20-year bond fund, what you're going to see out here is the TLT once again today rejected lower price, had lighter volume. We did 5.3 million. That with 5.3 million was going into 9.5 million from the 26th of March. Rejected lower price, has lighter volume. What does that set up? That sets up it's going to go after the swing high again. The minor swing high, which is 132.76 from March 25th. You take that out, guess what? That would leave opened the 137 level, which is up in January, and that's where all those highs are inside the bond market, folks. And the way the bond market is trading right now, it looks like it wants to get up and into them. Silver, let's go over and we take a look at the silver market. What we have with silver is this. Silver is trading at $16.49 an ounce, and what we have inside the silver market, that back down today with 47,000 contracts. Now, this is a difference, and this is pretty cool watching how this shakes out. That was a slight expansion in volume. It's still going against 60,000 from the March 20th. But that's a different take and setup than gold. Gold is still a better setup than silver at this particular point. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll come right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. We want to know what's going on in your world. Now, in the world of TFNN, folks, as you come over to our website on the front page, you're going to see the foundation of options trading. I'm going to be doing a workshop. It's going to be a webinar. It's going to be an hour and a half. It's going to be next Wednesday, a week from today, folks, from 5 to 6:30. If you want to know everything and anything about options, whether it's call spreads, put spreads, bottom line, come over to our website at TFNN. It's only $97. You get an hour and a half. If you can't make it live, it'll be on your page for a full month. Let's go to Stanley in Maine. Hey, Stanley, what's going on?
Hi, Tom. How are you?
I'm doing great, man. You having a good day out there?
Well, every day is good when you're getting around and doing things, right?
That's good. That's right. No doubt. That's a beautiful thing.
Before we talk turkey, I'd just like to say one thing. I hear comments occasionally about your accent.
Yeah.
Well, let me say this. I worked in the bowels of the city, downtown Boston, for 30 years, and I never met one person with an accent. I don't know what they're talking about.
I love it. That's perfect, man.
Yeah, isn't it?
Yeah,
I talk to people. I live in Maine now. I talk to people for about 3 minutes, and they start looking at me like, huh?
I love it.
Yeah.
I know. We're the only ones that talk correctly, man.
That's what I have to tell them. I said, you don't know how to talk. They get into this whole thing about R's. You drop your R's. I said, lady, where we're from, we never had R's, you know?
That's right. Oh, that's funny, man. I love it. So what are we going to look at today?
Well, I guess really to start off, I want to know if you think there's anything about Royal Dutch Shell that's worth getting involved with. Then there's two classes of shares, but if you determine there's an entry point and it's worth it, then we could talk about the two kinds of shares.
RDS. I'm trying to find this.
Yeah, I've got. I just punched up Yahoo so I could have the 52-week range, and they listed as Royal Dutch Shell, PLC, and then the symbol is in parentheses RDSB.L.
Yeah.
But it's Royal Dutch Shell that did the big buyout today.
Yeah, no.
I know you know who it is.
No,
I had trouble bringing up the A shares too. All I can bring up is the B shares. And I'm not sure which currency they're in, but maybe it's Dutch. They list them.
Well, I know how I can do this. Just give me 1 second. We'll go over. So first, let me see. I'll go over to the UK first. So there she goes. Okay, I know how to do this. Let's see.
So is that denominated in pence, or what is that?
It'd be pence and pounds. Yeah, because we bring it up. I'm going to bring up. I'll bring up the A shares first. So the A shares are trading at 1982 pence. They were down today. Okay, so let's see this. This is pretty cool. So what you're looking at, if you're watching Tiger TV, folks, you're looking at Royal Dutch Shell, but you're looking at it as it's trading in the UK. So what we're looking for is that, okay, should we be buying it or selling it or what we're doing? Okay, so when you take a look at this, I wouldn't be buying it yet, okay? So you come off the high of 24.75, which makes sense because oils get croaked, right?
Okay.
You can see that the high volume low of 08 hasn't been tested. Now, this gets intense, folks, because that hasn't been tested. Now, it certainly doesn't have to get down to that level, which would be 1,276 pence. The high of that, Stanley, okay, is 1757.
Okay.
So I'd let it kind of drift down there. That's kind of how this is set up right now. Okay. Let me do it this way, too. So if I go back, so that is the A shares.
Right.
If we go into the B shares, the B shares are trading at 2019. They probably set up the same way. Oh, this is interesting. See, the B shares are going, this is going to be an ABC down. The B shares are vicious, man.
Okay.
The B shares are going right into, so that's trading at 2019 pence. That 2003 is a breakdown, and we certainly got the volume today. Let me just see this. Yeah, just let this be a bit. You know, I suspect it's going to be a great deal because what you have with the takeover aspect, folks, is this. So this one here, yes, 1738. 1738. What you do is you let it get into the high of the low. That's how I'd trade that. You know, and if it gets too far into it with price, then you don't want to touch it.
Okay.
But the company that taken over, number one, has been a mess for quite a while. They really haven't had a CEO in quite a while. And what has happened, they paid a good-sized premium in it, okay?
Mm-hmm.
So that's like, okay, you know, big premium. But the bottom line is that oil doesn't have to come back that much in order for them to really start making money. Do you know what I'm saying? So,
yeah. I was reading today, supposedly in this deal, they were buying oil at $21.50 a barrel. Whether that's true or not, but I just
no, that would make sense in the ground. Yeah, that would make sense. You know, and what they're also going to be a huge player in is the natural gas market.
Right.
The natural gas market, okay, it's huge, folks, okay? So let's say Royal Dutch Shell will become a dominant player in the liquefied natural gas market through the $70 billion acquisition of BG Group. The combined company will sell 50 million tons of LNG a year by the end of the decade, which would surpass ExxonMobil and Chevron. You know, ExxonMobil and Chevron are expected to sell 25 million tons. Well, less than 25 million tons, and this other company is going to be selling 50 million tons. So,
okay, could I just bother you? What is the exact symbol you're punching this up on?
It's what I did is this. I can kind of move right around the world. So the quickest way for me to do that was to go to the UK. I pulled its main vehicle is trading in the UK, so I just pulled up the UK market. So that was easier for me.
See, because when I punched this up, I just brought it up on Yahoo so I could have the 52-week range. It's showing 1984 as a low and a high of 29.90. Pence, I guess.
Is that the B shares? Yeah, it's pence.
Yes, that's the B shares.
Yeah, but that makes sense.
Okay, so somewhere around 1750, something like that?
Yeah, I would wait, man, because...
Yeah, no, I know.
You know, the way that this is, like, I have this on a weekly right now, and it's set up for a monster ABC down, you know.
Okay.
The week's not over, and the week of December 19th of 2014, it did 35 million shares.
Yeah.
It's already done 40 million. You're trading at 2019, and the break of the ABC down is 1984. So if it went down as much today as it tomorrow as it does today, it'll break it, and it'll break it with volume.
Yeah.
And that would set up, let's see, 2,500. It sets up a 600 ABC structure on the way down, which will get you into that 1,700 area, man, which is a trip. Yeah.
I'm waiting, Tom, but I'm chafing at the bit, but I definitely don't want to be early. You know that. That's what you preach.
Yeah. Hey, so when did you move out of Boston? Are you working up in Maine? Are you grooving in Maine?
I got 30 years in the Boston building trades and pulled the plug.
Okay.
You can't work up here. You have to make your money and bring it with you.
Yeah, that's a fact.
It is beautiful.
That's awesome, though. I know. That's awesome when you do that.
Yeah.
I like it, man.
I tell you, Tom, I miss Boston. I love that city. What a place, huh?
It is a city. It's a great city, man.
Hey, thank you very much.
Thanks, Stanley. Have a great one. Have a safe one. You stay right there, folks. We'll come right back. Dow finished up 27. Nasdaq at 40. S&P's up 8.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Some of the high-volume stocks in this low-volume market. Mylan Pharmaceutical, that was the mover out here. That was up to $8.79, $68 trading at. Facebook was off 4 cents. You had, Marbell was down 51. You had Pfizer up 10. GE was up 38. Inside some of the Dow stocks, what we had, Boeing was up $1. You had Oxy down 21. ExxonMobil was off 169. ExxonMobil's the one to watch, folks, inside that Dow Industrials, because Exxon, if it does take out that B point, and it's going to go after the B point, the real key is that if it takes it out and has juice, that's a very large ABC structure on the way down. Let's go to David in Orlando. Hey, David, what's going on?
Hey, Tom, how you doing?
I'm doing great, man. You having a good day out there?
Well, I tell you, I've been having a tough time with the market, so it's trying to get through this challenging time. It just seems like every time it looks like it's ready to go down, they just jam it right back up.
That's a fact, no doubt, man.
And it's I started listening to your program in 2001, and you're not on the air here in Orlando anymore, but I catch you on your YouTube and on the TFN mobile site. So
yes.
It's been which is neat, but I guess it's just challenging because, a lot of the stuff I've learned over the years seems to not be working. So,
yeah, it's a grind. I agree, no doubt.
I want you to look at Gilead. I was thinking, I've been trading this a little bit lately.
Okay.
They looked like the biotechs were starting to kind of roll over, and this thing has sort of lost some steam, and wanted to see what you thought of it.
You get GILD. It's Gilead Sciences, folks. Okay, the high for the year is 116. The low is 63.50. We are short this right now. I'm short this equity right now. So what you have is this. You have now. This was the first biotech to roll over because none of them have rolled over. Now, what is so intriguing about this is that the biotechs themselves, every time they roll over, they make it all the way back. Like if I put the IBB up again today, you're going to see that the IBB was up $10. The volume was 2.3 million. Now, I suspect the IBB is just going to test this 58 area. We're at 352 right now. That, because we came down hard. You came down hard with 4.8 million shares, and we came down with 5.2. That being said, inside those biotechs, because just as you had said a little bit earlier, I was looking at the biotechs. I get stopped out of them twice, meaning going into that BIS. Do you know what I'm saying? And then I start looking inside them. I says, okay, Gilead is the one that is the weakest inside that biotech index. So my take.
It seems to be making lower highs, and then it got down to like 95 and change again. There's those two huge high volume lows, and it bounced out of it this last time, and of course it came right back at us up to the 50-day, and then seemed to fell a little bit today. But like I thought yesterday, when you saw this one had terrible volume, closed underneath the prior day high. Celgene closed at the daily low after reverse, and I thought, here we go. And then, bam, right back at us again today.
Right. And, it has the high volume low that it has is at 85. That was the December, 23rd level down there. And even the high of that low is 93.50. So I suspect, that's going to get tested, and that's where that's laying out. Now, what is pretty neat about this one is this. It just doesn't have one high volume spike, folks, okay? So picture, when this went down to a price point of that 89, then it bounced all the way back up to 107. So big move, no doubt, right? It's almost, $18, right? Then it blows apart again, and then you got the other spike that's down to 95.81. So it's like, to me, this is a decent setup, particularly because the IBB got traction today, and Gilead didn't get traction, and Gilead itself, I think it's the third largest weighting structure inside the IBB. It's 7.6%. So now watch how this works, folks. Okay, this is I haven't talked about this part of it in a long time. We always talk about the weighting structures, and it's important to understand the weighting structures. But what's just as important is this. This stock here today couldn't get traction. What happens is that the IBB got traction. As the IBB gets traction, guess what? Gilead has to be bought by the sponsor of the IBB. So when you see an equity that basically can't get traction, it was up today, but it wasn't up substantially. It was up from what? It was up $1 something. That says quite a bit, because you know that the sponsor of the IBB has to buy every equity that's inside the IBB. That's how it works. So when I saw this, because I was watching this closely today, because the bottom line is that I love that it has zero expansion to the upside when the IBB itself, that was, the IBB had some juice behind it. So, what I would do, you can put the stop on the other side of, you don't have to give this a lot, man. Just put the other stop on the other side of those swing points, on the other side of 102.71. All what you can do, if you trade options, we're in the option market with this too, because what has happened, now this is what's pretty cool, folks. I'm doing this option workshop next Wednesday, but what you also have here is that the option pricing, you wouldn't want to get this today because the premiums went up a bit. But if you watch this closely, what does happen as this goes forward, the option pricing basically levels out on these, which is pretty insane, because the volatility, you'd think the volatility would always stay high, and it doesn't. Inside GILD, actually. Here, let me just pull up GILD, and I'll show you the correlation. The correlation is pretty intense. So, yeah, it's right here, right now. So watch this, folks. The correlation inside the IBB versus the GILD. The GILD right now, you can buy basically at the money puts on GILD for $1.40, $1.40. Okay, that's a decent deal in the aspect that you're basically saying, hey, for $1,400 instead of $9,900, that'd be $1,400.
You mean 99,000?
99,000. Yeah, exactly. Yeah. Okay.
So I'm in the 100 puts on this, and I had traded.
Okay, cool.
Yeah, it was a lot cooler, 2 mornings ago.
No, it was. Okay.
But let me ask you, Tom, do you have a second for me to ask you another question?
Yeah.
So, as I said, I've been listening to your program on and off for 14 years now.
Yes.
And a long time, and I caught you in the early days of gold and other periods and so forth. How is this situation in the market not going to end in devastating fashion? I've been a financial advisor for 11 years, and I've never been more confused and concerned about just the market in general ever. And I don't see how this thing unwinds without some serious fallout.
This is what I've seen, and now this is I'm answering because I'm going to answer the aspect of the out of time in the trade too, the price and volume inside of this. So what I've really seen, right, is that the indices themselves, okay, whether it's the S&P, they can seem to push it, the Nasdaq, the individual stocks though they can't. It's working pretty good on real good actually in the individual stocks, right? And what has happened, and I haven't analyzed every one of these stocks in the correlation of how they can keep the S&P up, but there's a lot of stocks that already got croaked. And I'm sure that you understand it, being either a financial advisor or in the business, what does happen, and this is what precipitates sell-offs, is that clients get their statement and say, hold it. The S&P is up this much money. Why isn't my account up this much money? And it has to do with that a lot of these stocks are basically off their highs by a dramatic amount. And do I think that we're going lower? Yeah. What my mind blower is right now is this: is that the SPY's trading at 207. Never mind where I think the market's going. Just the high volume swing low at October 18th is 181. It's like the probability that you're going there is dramatic, man. You know, so that in itself, that hit in itself, people will freak. This is, you know what this is going to be like? Folks, in 1994, okay, I'll never forget this, because in 94, the market went on a decent tear up, okay? But what it did is this. All it did on a continual basis for about a year and a half, it went up. It only went up a little. But this is what ended up happening. People were so used to the market going up that when the market only pulled back, I think the market only pulled back like 12% or 15%, people were totally flipped, man. I mean, that's the type of thing that I suspect we're going to see here, David. Do you know what I mean? That when they get just a decent pullback, it's going to be a problem. And if it's anything like 94, man, I'm telling you, man, I saw people bail, and what happened, the market only came back 13, 14%, but because they were so over-leveraged, people lost a fortune. It wasn't like they lost 13 or 14%. They lost big dollars, man, so.
Thanks for taking the call.
Okay, man. Have a great one. Have a safe one. You stay right there, folks. We're coming right back. Dow Industrials finished up 27. NASDAQ up 40. S&P's up 8.5. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Join Andy Hecht as he shows you how to make money in commodities. The Commodities Hour, next on TFNN.
Tom O'Brien. Welcome back, folks. And, last night, folks, you had the Hang Seng market went up 3.8%. Pretty amazing, the expansion up there. I met Mr. Dave White. He was talking a little bit earlier about the PE. The PE, and this is great info, folks. The PE right now, if you thought and that's what the story was about, if you thought the NASDAQ was high and 2000, that was a 154 PE, a 145 PE, I guess. It's a 250 in the Shanghai right now. The chart that I have up that you're looking at now, this is about as intense as you can get. What this chart represents is this. This chart represents the amount of new people opening broker-dealer accounts. And what you're going to see is that if we go back to, this is like really crazy too how this works. So, and I haven't bisected and dissected this yet because I just put it up in the break. But I pulled it back because I wanted to see how it looked going backwards. Well, bottom line, in 2007, right before the peak, you're going to see the same type of peak. This is in the thousands, okay? Each number represents thousands, not hundreds. So it's monster numbers. If we go to February of 2007, you'll see you're talking about 230,659, okay? In 1 month, okay, it went from 2.3 up to, this is about as bizarre as you can get, 1561.31. So what is that, 7 times? Yeah, 700% acceleration. So now check out what just happened. What has just happened here is this, and this just happened this month. We just went from a 262.29 up to a, this is really bizarre, a 1683. So what that's 28. That's gonna be 8 2s are 16. That's gonna be 7 times. That's gonna be 700% move of new broker-dealer accounts. So we'll see where that does shake out. If you put the HSI up, what you're gonna see is that this looks to me like a very large ABC structure on the way up, but it's just finishing up. That's what it's doing. But when you have an expansion that's this dramatic, you can do more than a 1 to 2 ABC structure on the way up. What you'll see here is that we went up 961 points last night. That's about as intense as you can get, man. That level, let me see, if I take this, this is, yes, that was what I was just showing here. I'll check that, whether that was accounts in China or Hong Kong. The frenzy that made Chinese stocks world best performers spilling over the border to Hong Kong after propelling the Shanghai index. So the Shanghai index is up 90% in 12 months. So what's going on is this. That is the amount of accounts that are opening in mainland China. And what has happened is that the rulers of mainland China have allowed the citizens to trade in Hong Kong. And they're called links. And this program has been on for 4 months. In the first 4 months of the program, it wasn't a big deal. For some reason now, because what happens is there's a premium into the aspect, and that premium is going to keep moving lower. That premium, however, is still pretty intense. And so what has happened is that they're using these links to basically get into the Hong Kong market. And when we take a look at the Hang Seng, this bottom line, this Hang Seng, you took everything out with volume. But we had done that actually back before. If I put this on a monthly basis, put this on a 5-year month, I'll put it on a 10-year. Yeah, this baby's going back to the 2000. Well, see, this hasn't even hit the 2007 highs yet, so we're actually ahead of those people. 24.95. We did 37 billion versus 41 billion. Yeah, so even last month it started pushing with volume. This month you're probably going to have it over the volume. And, you know, the next swing point out here is 27.85, which is up, that's another 27, that's another $1,600. And bottom line is that your highs are 3,100. It's something you want to keep your eye on, though. You know what's crazy here, folks? Oh, this is sick. This has a high volume high. The Shanghai is a high volume high at 31,000. Oh, man, that's sick. That's sick. But, yep. Wow. It's going to be interesting to see how this plays out. You know, markets don't end on high volume highs. That's how it goes. It's pretty sick. And what that high volume high would have been, so if I bring this back further, you're going to see that the expansion then was dramatic too. Remember, the Shanghai went from 10,000 nonstop to 30. My God. Yeah, to 31. That's what it did. You know, then, so that's 2007. Consolidated this whole time, has some juice. That's, you know, bottom line, the way that's set up right now, that's basically saying it wants to go up and at least test that area. So we'll see how this whole thing does shake out. When we take a look at our own S&Ps, and you can expect more volatility out here tomorrow, folks. So if you take a look at our own S&Ps, what we've done is this. We're at the exact same spot that we were in November 25th. That's the first part. Consolidation's been on, but guess what? All the volume in this consolidation is down at the lower end of the consolidation. The lower end meaning 197. So what does that set up? That sets up you're going to go at least test there. We'll see when you get down to a test there, will you have the energy to break down to lower price, or will it reject the lower price, try to get into the highs again? Each time that we're trying to get into the highs, guess what? Doesn't have the juice, can't hold the price. And the longer that we stay under the 208.50 area, the more problematic it is. And see, the 208.50, I just didn't pull this out of the air. What that would be is that is the range that you're actually in. And we did get out of that range from February 13th over to March 6th. Then we got out of it. So that was, you know, that was a good almost a full month, almost 20 trading days. You get underneath it again, and then you only can get out of it for 4 days. So since the November time frame, you've been under that range, and you have those high volume spikes down at the lows. So that's saying, hey, it's going to go down and test it. And of course, the October 15th swing low, that's your biggest danger point, folks. The October 15th swing low wants to be hit. Always remember, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize like a nice big motion picture. Step into it, take ownership of it, and fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking right here tomorrow. Go get them, folks.